So, we've let you know before that here at the Gumla Trust, after we've covered the operating cost of both GAC and GIPL, we take 40% of the remaining yearly revenue and use it to invest into the Future Fund. We have 4 main types of investment within the Future Fund: stocks, bonds, real estate, and cash. But why do we invest in different areas? Well, each of these investment types work differently and have different levels of risk and potential growth. So let's take a deeper dive into the world of investing. Stock is owning shares or a portion of a company, such as Apple, who make iPhones and iPads, or Synergy, the power company, or even Rio Tinto, who mine the iron ore at Yandi Koogyna. This can be the riskiest form of investment, and you can end up losing money, but it can be the most profitable and provide you with a lot of money. Some companies might grow quickly and some might not. That's why there is an element of risk. For example, if you bought $30 worth of shares in Apple 5 years ago, those shares would be worth around $120 today because Apple has grown. We wouldn't have been able to make that much money by just saving, and that's why it's worth the risk for us to purchase stock. Stock will also typically provide annual revenue in 2 ways. The first is by paying dividends, where the shareholder, in this case the Gumla Trust, is paid a return when the company we've invested in earns a profit or surplus. The second is when the stocks themselves increase in value based on demand from investors to own stocks in that company. Ideally, companies will aim to deliver both dividends and capital growth. However, some will only focus on delivering one of those. There are lots of different types of companies in a great variety of industries, both within Australia and overseas. So, there are many different options for shares with different levels of risk and different levels of potential rewards. The more potential growth, the more profit we will make. But that also means we have a higher risk of losing money if the companies don't grow or fail to make a profit. Bonds, which is another type of investment, are basically a loan to a company or the government. They borrow by selling a bond which the investor purchases, and this bond is a binding promise from the borrower to the investor to repay the money borrowed in a fixed amount of years, with a specified interest rate or fee for borrowing the money. Overall, bonds are viewed as less risky than stock, but their interest rate returns are also not usually as high as the returns earned on stocks. A third type of investment that we do here at Gumla Trust is real estate. This is usually properties, houses, or commercial buildings purchased to earn revenue by renting them out. We can also make money through capital growth when we sell these properties, houses, or commercial buildings, and they have increased in value since we bought them. Since this can be difficult to do by ourselves, we work with professionals who manage our real estate portfolio, which is simply a phrase for the number of houses, commercial properties, and buildings we own. Finally, the last type of investment we will cover is cash. Cash or money has little risk of losing value, but it also is the least profitable out of the 4. We hold cash in a bank, which produces interest. Interest is a small increase of money that the bank pays if you keep your money in your account. It's not very profitable, and for the most part, we only keep cash in order to purchase things for Gumla, such as houses for our real estate investments. In a previous video, we talked about diversification, which means having a wide variety of investments to reduce the overall risk. We invest across all these categories to minimize losses while making the most money, as not all the 4 areas generate good revenues at the same time. It's all about the balance of risk and making sure we manage the future fund to ensure it's there for future generations. There is some level of risk involved with all investments, and as we've explained, the more potential profit an investment has, the more potential risk. But we employ experts across all fields and make decisions to continue to grow the future fund in the safest way possible. While the revenue from the Yandi Land Use Agreement currently funds the majority of Gumla and its member programs, we hope that our investments will eventually generate enough revenue to replace the land use from Rio Tinto when the Yandi mine closes. Your money is in a safe pair of hands.